Let's jump right into this. Welcome to today's Explainer, where we're going to unpack something truly wild in the worlds of high-performance finance. We are looking at the FMTM ETF's June 2026 portfolio rotation. Now, if you follow the markets, you know speed is everything. But as humans, we get emotional, we hesitate. Today, though, we're not talking about human analysts arguing in a boardroom. We're looking at a ruthless, insanely efficient quantitative algorithm that's built for exactly one thing: capturing extreme market momentum. So here is our game plan. First, we'll break down the emotionless FMTM algorithm itself, look at its strict equal weighting rule, dive into what I'm calling the June 2026 purge, and finally, check out its total domination across semiconductors, AI, and energy infrastructure. Okay, just look at this number: a 931% return on a single stock in just 1 year. I mean, honestly, it almost looks like a typo, right? But it is very, very real. And it brings up a massive question. How exactly does a machine manage to catch these extreme market vectors while human traders are left in the dust? Or, just pull out way too early? Let's find out. Section 1. The FMTM algorithm and its emotionless trend capture. Unlike human managers, the brain of this ETF runs purely on momentum. It doesn't watch the news, it doesn't care about what a CEO just tweeted, and it absolutely never feels hesitation. It just reads the data and acts. This quote right from our source material really hits the nail on the head, without emotional bias or fundamental attachment. Just think about it. How often do human investors hold onto a losing stock just because they, believe in the company, or they just can't stomach taking the loss? Well, the FMTM algorithm is totally surgical. If a stock shows any sign of exhaustion, it's purged, period. That capital is instantly redirected to the strongest upward trends. It is unapologetic momentum capture. Moving to Section 2, the strict equal weighting rule. Because look, catching momentum is awesome, but without mechanical risk management, you're literally just gambling. Check out this incredibly narrow weighting band. Every single stock in this portfolio is strictly forced to sit at roughly 3% of the total weight. Specifically, it's constrained right between 3.22% and 3.72% when it rebalances. This guarantees optimal diversification across its 31 active positions. It genuinely does not matter if a stock is the absolute hottest AI chipmaker on the planet or just a steady, boring industrial giant. Every single one gets the exact same slice of the pie. So how does this weight leveling actually play out in practice? Well, every single month, the algorithm mechanically locks in gains from its past winners by skimming off the excess. It takes those liquidated profits and uniformly spreads the capital across the rest of the portfolio. This is a brilliant move because it forces the fund to sell high and buy low within its momentum universe. It completely neutralizes the risk of any single stock taking over and hijacking the portfolio's risk profile. Section 3. The June 2026 purge. Focusing on the monthly rotation. Let's look at what this emotionless engine did during a super aggressive execution phase. Out of the top 25 positions analyzed, the system brought in 15 completely fresh stocks and hold on to just 10 of its historical positions. That is a massive turnover rate. It completely proves the algorithm's aggressive, sweeping style and its absolute zero loyalty to past performers. Seriously, if momentum cools off even a tiny bit, boom, that stock is gone, instantly replaced by fresh upward velocity. Up next, Section 4, Domination in Semiconductors and AI. So, where exactly did all that freshly reallocated capital actually go? You're going to want to sit down for this first metric. Astera Labs, ticker ALAB, came out as the largest position in the fund, sitting right at the absolute top of that narrow band at 3.72%. The algorithm locked onto it, and honestly, you can see why. It brought in a genuinely staggering return of almost 278% over a single year. And the crazy part? This wasn't just some lucky one-off dart throw. When you map out these cascading returns, it shows a systemic capture of insane velocity across the whole chip sector. You've got Astera Labs up 278%, Lattice Semiconductor up over 227%, and ON Semiconductor cruising at 187%. The machine didn't just stumble on one winner. It saw the massive factor acceleration happening across the entire semiconductor industry and systematically squeezed it for all it was worth. Section 5. Tech and Energy Infrastructure. Because the algorithm knows it's not just about the microchips, it's about the physical reality needed to sustain the boom. This brings us to the actual June 2026 rotation report, showing the raw inventory data. Looking at the primary source here is absolutely crucial because what we're going to look at next is, well, it's almost hard to wrap your head around. Here it is, the absolute climax of this whole rotation cycle. The algorithm heavily integrated Western Digital, locking in a jaw-dropping 931.35% gross return. 931%. The system perfectly recognized the market's massive pivot toward the data storage supply chain. You know, the hardware you literally have to fuel the whole cloud and AI boom. This is exactly what it looks like when a totally emotionless machine rides a macro trend to its absolute peak. But here's the thing. All that intense data processing requires an insane amount of power and cooling. And the algorithm saw that coming too. It held on to incredibly robust positions in the industrial and energy block. You have Vertiv Holdings, a major player in data center cooling, pulling in almost 193%. You have Mastech, deep in the infrastructure game, bringing in over 142%. It's a total validation of the electrification theme, perfectly rounding out the portfolio by securing massive gains in the physical world to match the digital ones. So we've seen the surgical precision, that super strict equal weighting, and the explosive triple-digit returns this system locked in. And it leaves us with a really provocative thought to end on. If an algorithm can just effortlessly capture these extreme returns, totally free of human hesitation, loyalty, or fear, what is the actual cost of our human emotions when we invest? It's definitely a fascinating look at the ruthless efficiency of quantitative momentum. Anyway, thanks so much for joining me for this explainer. I hope it gave you some amazing insights into how modern market momentum actually works behind the scenes. Catch you next time.